In recent years, China and Russia have significantly strengthened the economic ties, with bilateral trade reaching record levels. In 2024, the trade between China and Russia hit a new high of $244 billion, marking a 1.9% increase from the previous year. This growth reflects the deepening of their partnership across multiple sectors, driven by several key factors that highlight the long-term sustainability and potential for this economic relationship. China has remained Russia's largest trading partner for over 14 consecutive years, an impressive streak that underscores the importance of this economic alliance. The composition of trade is marked for a clear division of strength. China's export to Russia in 2024, China reached a staggering $115.5 billion, up 4.1% from the previous year. The key exports include electronics, vehicles, chemicals, sectors where China maintains a competitive advantage. These products not only fuel Russia's industrial growth, but also enhances technology and integration within the country. On the other side, Russian exports to China stood at $129.3 billion, a stable figure largely dominated by raw materials, crude oil, and fossil fuels. Russia continues to rely heavily on its natural resources to meet China's ever-growing demand for energy and raw materials, crucial for China's manufacturing sector as well as their energy needs. A defining feature of the China-Russia economic relationship is the significant shift away from the US dollar in their bilateral trade, in a move that aims to reduce dependence on the US financial system and mitigate the impact of Western sanctions. The two countries have increasingly transacted using their own currencies, a dramatic shift away from the dollar. As of 2024, 90% of the trade between China and Russia is now conducted in their respective currencies, Chinese yuan and the Russian ruble, rather than the US dollar. This decision not only reduces the reliance on the US dollar, but also signals a shift in global trade dynamics, potentially influencing other countries to follow suit. This move aligns with the broader trend of a de-dollarization occurring in the various parts of the world, as nations to assert more control over their own financial systems, reducing vulnerability to Western sanctions. The decision to bypass the US dollar has been partly driven by the ongoing sanctions imposed by Western countries. These sanctions have targeted Russia's financial sector, restricting its access to the global financial system by using their own currencies. Both China and Russia reduced their exposures to these sanctions, reinforcing their economic sovereignty. The key sectors driving growth is a diverse and expanding partnership. Several key sectors have seen substantial growth in the China and Russia trade relationship, particularly emphasized on industries such as automotive, engineering, and technology. In an automotive sector, China has seen an incredible surge in car exports to Russia, with a remarkable 594% increase in 2023 alone. Additionally, exports of the trucks and tractors to Russia have increased by nearly 700%. This growth signals the rising demand for Chinese-made vehicles and machinery in Russia. Driven by both affordability and technology improvements, energy continues to be the cornerstone of bilateral trade relationship, with Russia remaining China's second largest supplier of oil and natural gas and coal. This energy relationship has only deepened in recent years, as Russia seeks to secure long-term contracts to supply China with critical energy resources. In 2025, Russia is expected to significantly increase its energy exports to China to meet rising demand and sustain its income from this vital sector. This energy supply chain is crucial not only for Russia's economy but also for China's energy security, especially as it seeks to reduce its reliance on the Western countries, navigating obstacles. While the growth in trade between China and Russia is impressive. There are several challenges and uncertainties that could impact the trajectory of this economic partnership. Slowing growth rates despite the record-breaking trade figures that growth rate has slowed compared to previous years. From 2023 to 2024, overall yen-denominated trade values increased by only 2.9%. This slowdown could be due to a variety of factors, including global economic conditions, reduced consumer demand, and internal market fluctuations in both countries. Impact of the Western sanctions. Western sanctions continue to pose a significant hurdle, especially in the financial sector. These sanctions have had a direct impact on Russia's ability to access international markets and engage in global financial transactions, placing a strain on trade. While the shift away from the US dollar has helped mitigate this issue, the sanctions still limited and full potential for China-Russia economic cooperation. China is seeking alternatives for some Russian imports, especially coal, which has seen rising prices. Due to this higher cost, China is considering diversifying its sources from these raw materials. Additionally, potential further sanctions could disrupt the flow of certain goods, leading to supply chain challenges for both countries, shaping the future of global trade. As China and Russia continue to deepen their economic ties, the implications of this partnership are far-reaching. The growing economic alliance between the two nations is likely to have significant consequences for global trade partners and geopolitical dynamics. As these two countries increasingly align their economic interests, it may signal a broader shift away from the traditional Western-dominated trade system. This realignment could influence global power structures, with China and Russia positioning themselves as a key player in the new world order. Russia's role as a major energy supplier to China could have ripple effects across the global energy markets. As China becomes more reliant on Russian energy, other countries may seek to secure alternative sources of energy, leading to a shift of global supply. The strengthening of economic ties between China and Russia could also lead to development of new trade routes and infrastructure projects. With the two countries increasingly dependent on each other for energy and raw materials, there may be significant investments in pipelines, railroads, and ports to facilitate the flow of goods as well as services. A partnership shaping the future. The economic relationship between China and Russia has reached new heights, driven by growing trade, shifting currency practices, and expanding industry. Challenges remain, particularly in the face of the Western sanctions. The future outlook for this partnership remains strong, with both countries positioning themselves as key players in the global economy. As China and Russia continue to deepen their ties, it is clear that their economic partnership will play a central role in shaping global trade and geopolitical dynamics for years to come.